Good day, people. So this is part two of the Tesla Q1 revenue, or let's call it financial review. Basically, got cut off last video, so had to drop the kids to the bus stop. So I'll jump right in right now. And so we left off speaking about the revenue within the shareholder deck. So I'm going to go back to that. Keep in mind, these financials are from January through March of 2026, which is their most recent. And so, well, you can get this information on your own going through Tesla website within their investor relations, and that'll get you all this information. And so, and I think we had the 10Q open as well. We may even have the earnings. Maybe not. So they have a few different items here. But so we left off with the revenue being at 22.4 billion, I think. Let's see. Yep, we left off here. This 22.4 billion. So basically this is from their revenue. A lot of this come from their automotive. So cars. Everybody see Tesla cars, trucks. They also have energy divisions. And so those are those items. That's what makes up the 22 point, we're calling it 22.4 billion in revenue. And then for as expenses go, which is the second portion of the income statement, they have expenses, operating expenses of 3.8 billion. Yeah, 3.8 billion. And so these are operating expenses. Now there's another expense that they're not really covering here for whatever reason. And we may have to go into the more detailed financial statements to figure that out. And that's what I'm going to do right now. And so here we go, the 10Q. Now, this is what they give to the SEC. As you can see, Securities and Exchange Commission. So Tesla as a corporation gives this information to the SEC as part of their financial responsibilities. Now, we are focused on the income statement, which they call the statement of operations. You have profit and loss. Some people call it profit and loss, statement of operations, income statement. Basically, they're measuring your revenue and your expenses to get your net income. And so, revenue, when you're dealing with Tesla, we talked about it, 22.4 billion, but this gives you a deeper detail of that 22.4 billion. And when I say a deeper detail, it shows you the automotive sales, it shows you certain credits that they receive to get into that 22.4 billion. Um, so yeah, definitely good information. Now, but what I want to focus on is the cost of revenue, which is right here, the cost of revenue. And so for all of the vehicles that Tesla produces, they also have to account for the expenses required to produce these vehicles. And that is a substantial cost within itself. And we are able to evidence that substantial cost by looking at these numbers. So, cost of revenue, total cost of revenue was 17.6 billion. And so out of the 22.4 billion Tesla received in revenue, 17.7 billion was cost. And so let me say that in a better way. It cost them $17.7 billion to make 22.4 for $22.3 billion. And so that's just some insight on their expenses as it relates to their production. Now, they do have other expenses as well. And so they're called operating expenses, which you can see here at this 3.799, which we could call it 3.7 billion. And so when you add the operating expenses, which are 3.7, 3.8 billion, to the total cost of revenue, you get a bigger picture on how much it actually costs to make that 22.4 billion. With that being said, that number is also communicated here in income from operations. So this 941 million actually is a math problem that consists of revenue minus expenses. Expenses being operating expenses, but also this total cost of revenue. And so, any questions, let me know in the comments. We'll get that worked out. But basically, income from operations 941 million. So out of the 22.4 billion that they brought in, they only actually kept 941 million. And so a lot is going on in expenses. And some people like that about Tesla, some people don't like it. And so that summarizes their income statement. And there's some other things in here. Um, This is the statement of cash flows. I should probably cover this. This is very important. It just measures the cash. How did you receive your cash? And so, cash flow from operating activities. This is your cash flow from the life of your business. And so, if you make sales, you do things. This is that cash. And then you have cash flows from investing activities. This is cash that you might get from actually putting money into the market on short-term investments. That's something that Tesla is known for, or other items. It could be from financing. You when I say financing, uh, actually, cash flows from financing is the third and last one, and this is from like debt. And so if you like issue debt and things like that, you might give out a bond. Hey, I gave you 100,000, and I'm charging you interest. You would put that in here in the financing activities. And so you got three main topics to summarize the statement of cash flows. You're getting money from your operating activities, you're getting money from investing activities, or you're getting money from financing activities. And once you sum those up and you sum up the changes, you get the statement of cash flows. We'll keep playing around with that as we go through. But long story short, here, Tesla, they did make a lot of good money. They have a lot of expenses, like always, and they kept what they can. But they're on the cutting edge of technology. The question remains, will this research and development, will all of these expenses that they have really mean something at the end of the day? And so, another thing we could cover is the balance sheet. Uh, just to cover this quickly, assets minus liability equal owner's equity. Assets, that's the big dog. Liabilities, this is what you owe. Not necessarily a bad thing. And then equity, this is what you own. Very important. Very, very, very important. So let's look at their total asset line, which is right here. Total asset line, 144 billion. All right. 144 billion. What is that made up of? Well, it's made up of two types of assets, current assets and long-term assets. Let's look at the current assets first. Current assets, 69 billion, 69.7 billion. Now, when I say current assets, these are things that you expect to use within the next year. I'm not saying you're going to blow it in the next year and just waste it, but you're going to have use of it. And then you have long-term assets, which are things generally like your real estate. And so, going into their first current asset, their biggest asset is short-term investments here at Tesla. And so they have cash from short-term investments, and they put money into the market. It could be in a derivative product, whatever the case may be, and they receive cash from that. That would make up. When I say receive cash from it, they haven't sold it yet, but it's still within their balance sheet as a asset. And so this is an asset for them. They own the security, but it's not yet sold, and so this is an asset for them. But they may sell it within the next year, and so this is where this comes from. Then they have cash on hand at 16.6 million, uh, a billion, and so this is just cash in a bank account, basically. So Tesla definitely got cash on hand. Um, Not all this cash come from operations. Some of it may be from loans and things like that, and that's what we'll talk about in the liabilities. So you can't just look at this number and say, "Wow." You have to understand it more. We'll do some of that here, and that then they have a few other items. Accounts receivable. Accounts receivable is anything that you're owed, and so Tesla may be owed. Um, they may have billed certain clients, certain customers, and they're just waiting on those payments. And so they haven't been paid yet, but for accounting purposes, they're able to count that revenue, uh, count that cash rather. Uh, and so that's pretty much some of that accounts receivable. Total current 69.78. And then we have some long term assets, property, plant, and equipment. This is pretty standard. This is the biggest long term asset, 43 billion. And so when you're dealing with Tesla, they have services that they offer. When I say services, they build things, and they build those things on certain properties. And those properties they own a lot of facilities, and so they're able to count that as an asset, as a long term asset. And so a lot of that is their real estate. So when you look at the real estate, which is 43 billion, and then you look at the cash, the short term investments we talked about, um, one thing we didn't talk about is inventory. Inventory is another current asset that they have. It's a big portion of their current asset. And so this is when you see before you see the Model Y or the truck or anything like that on the road, it's in their inventory being produced. And so Tesla currently has 14.4 billion in inventory waiting to be sold. And so when you add the cash, 16.6, the short-term investments, 28.1, and the inventory, 14.4, and the real estate, 14.2, you'll get most of what's in this asset line of 144 billion. Liabilities, total liabilities consist of 59 billion, which it's not too shabby when you consider they have assets of 144 billion. And so there is some spread there, and let's talk about that. And so um, their biggest liability, and liability are just people or vendors, companies that you may owe. Their biggest liability um, comes by way of their current liabilities line, and let's talk about that. The current liability line, accounts payable, these are people that they owe, and so they could owe vendors for steel, for certain inputs to product, and so they owe around 15 billion in bills or payments. Other accrued liabilities, and other deferred revenue. These items are not really well, the deferred revenue. That's people giving early payments to Tesla, and Tesla hasn't provided the service. And so that's 3.4. So that's not really that big. But accrued liabilities, that is a pretty big one. And this is kind of like accounts payable. These are items where Tesla owes, and that person or group or vendor, they're wanting their money. And so you have accrued liabilities and accounts payable, which gets you around 29 billion. So Tesla has a lot of people that they owe. When I say a lot, it's relative, but 29 billion quantitatively is a good figure that most people will say is a lot. Um, and so that gets us to a big portion of the current liabilities, 26 of that 34 billion. And keep in mind their total liability line is only 59 billion. And so um, we kind of covered most of it. And then they have some other long-term liabilities that they speak more about in the notes, but here quantitatively it's not that big. We touch more than half of the liabilities, which leaves them, and keep in mind, assets minus liability equals equity. And so they have a good equity line of 84 billion. And so if you want to go deeper in detail with that, you can kind of see that information here. Additional paid in capital and retained earnings. If you own stock or if you play around in Tesla, you really like this number, and you also really like this number as well. These are all the retained earnings throughout all of the years for Tesla. And it shows that they do keep a lot of their income. And as far as their additional paid in capital, their valuations are pretty good. And so this kind of sums up their equity. And just to keep in mind, one of the biggest things in retained earning, in my opinion, is this connects to the income statement. And so when you make money, remember income statement, revenue minus expenses equals net income. Net income is a direct input into retained earnings. And so when you make your net income, you put it into retained earning from an accounting perspective. And so very important. And so that kind of sums up their balance sheet, which I would say is pretty good. Pretty good. From a number perspective, there's companies that's better, but uh, still they're not eating up all of their assets with too much liabilities. And so that pretty much sums up the Tesla overview. If you have anything you want me to cover, let me know. Don't forget to like, follow, subscribe, all of that. And until next time.